Hedera just dropped a bombshell upgrade that's going live in December, and almost nobody's talking about it. We're talking dynamic address books, scheduled smart contract calls, and infrastructure changes that could fundamentally reshape how developers build on this network. Meanwhile, the HBAR price is coiling up at a support level that's held like concrete for weeks. Coincidence? I don't think so. Something's brewing here, and if you're not paying attention, you might miss the setup of the month. What's up, crypto fam? Welcome back to the channel. If you're new here, I break down blockchain upgrades, market technicals, and the moves that actually matter. No fluff, no moonboy nonsense, just real analysis. So smash that like button, hit subscribe, and let's get into this Hedera situation because December's looking spicy. Alright, so Hedera's been quietly cooking. On November 25th, the testnet upgraded to version v0.68 after about 40 minutes of maintenance. Now this wasn't just some routine patch. This upgrade is laying the foundation for something called a dynamic address book, which is scheduled to hit Mainnet on December 10th. And trust me, this is a bigger deal than it sounds. Currently, Hedera operates with a static address book. That means node account IDs are basically hard-coded and locked in place. If a node operator wants to change their account ID, it requires a full network redeployment. That's clunky, inefficient, and honestly kind of archaic for a network that claims to be enterprise grade. The dynamic address book changes all that. Node operators can now modify their account IDs without redeploying the entire network. It's smoother, it's faster, and it's exactly the kind of infrastructure flexibility that enterprises actually need. According to the Hedera team's announcement on X, this update also brings HIP 1215 to life, Generalized Scheduled Contract Calls. This lets smart contracts schedule future contract calls directly through the Hedera schedule service. Developers can now create, trigger, cancel, and manage scheduled transactions entirely on-chain. That's huge for DeFi protocols, automated treasury management, and any dApp that needs programmable execution without relying on external bots or centralized schedulers. This upgrade doesn't just improve functionality, it fundamentally changes how developers interact with Hedera's API. If your infrastructure or tooling is still using hard-coded node account IDs, you're about to have a bad time. The shift to dynamic addressing means developers need to update their systems before December 10th, or risk compatibility issues. That's a tight window, and knowing how dev teams move, some are definitely scrambling right now. And then, there's HIP 1299, which governs the security rules around these dynamic node account IDs. It prevents account ID reuse across nodes, enforces proper authorization for changes, and safeguards fee and reward flows. Translation: Hedera's making sure node operators can't game the system or accidentally break consensus by recycling IDs. Smart move, but it also adds complexity. Anytime you introduce this level of flexibility, you open the door for edge cases and potential exploits if the implementation isn't perfect. Now Hedera's track record is solid, but this is a mainnet upgrade happening in less than 2 weeks. Testnets are one thing. Mainnet is where things get real. One bug, one oversight, and you've got a network halt or worse. The stakes are high, and the crypto community isn't exactly forgiving when upgrades go sideways. But let's be real. Hedera's dev team isn't exactly amateur hour. They've been testing this on testnet since November 13th, and the v0.68 rollout went smoothly. That's nearly 3 weeks of live testing with no major incidents reported. That's a good sign. Plus, this follows release v0.67, which landed on Mainnet and testnet back on November 12th without a hitch. That update focused on stability and performance improvements for the Hero Consensus node, and it delivered. So the foundation is solid. What I like about this upgrade is that it's practical. This isn't some vaporware feature designed to pump bags. Dynamic address books and scheduled contract calls solve real pain points for developers and node operators. Enterprise clients, Hedera's bread and butter, need this kind of operational flexibility. And if you're building serious DeFi infrastructure, programmable smart contract execution is non-negotiable. But wait, there's more. Hedera just announced a price adjustment coming in January 2026. The cost of a consensus submit message transaction is jumping from 0.0001 to 0.0008 USD, an 8 times increase. Now before you panic, this is still dirt cheap compared to Ethereum or even some layer 2s, but it signals something important. Hedera's network usage is growing and they're adjusting tokenomics to reflect actual demand. Higher fees usually mean higher transaction volume, which means more HBAR being burned or redistributed. That's bullish for long-term holders. Now let's talk price action because this is where things get fun. On the 4-hour chart, HBAR's been defending the 0.122 level like it's the Alamo. That was the November low, and every single time the price has dipped toward it, buyers have immediately stepped in. No hesitation, no panic selling. Just consistent buying pressure at that zone. The latest bounce pushed HBAR back toward the mid-0.14 range, which tells me this support is legitimate. When a level holds during weak market conditions, and let's be honest, November was rough for altcoins, it usually means sellers are exhausted and a base is forming. HBAR looks like it's building that base right now, and historically, these quiet accumulation phases lead to explosive moves later. We've seen this pattern before. It's textbook. The momentum indicators are backing this up too. The RSI has stabilized around the mid-50s, which means we're no longer oversold or trapped in a heavy downtrend. It's neutral territory, but leaning towards strength. That's the sweet spot. When RSI recovers from oversold conditions, but hasn't hit overbought yet, that's your window for entries before the crowd shows up. The MACD is slowly recovering as well. It hasn't flipped fully bullish yet, but the negative momentum is fading. This is the reset phase. According to technical patterns I've tracked, HBAR tends to make significant moves not long after the MACD resets like this, especially when it happens near strong support. We're right at that inflection point. And here's something most people aren't watching. Open interest relative to market cap is climbing again. It dropped earlier in the month, but now it's inching higher. That means traders are reopening positions after the pullback. It's not a flood of liquidity yet, but it's a leading indicator. December won't stay quiet if this trend continues. Right now, longs and shorts are almost perfectly balanced. That's actually a bullish signal. When both sides expect a move but disagree on direction, volatility tends to spike fast. Someone's about to get squeezed, and based on the support holding and momentum improving, I'd bet on the shorts getting wrecked first. So where's this headed? If HBAR holds above 0.14, a move back to the 0.155 to 0.16 resistance zone seems likely in early December. That area has rejected price multiple times, but a clean breakout could open the door to 0.175, a level HBAR hasn't touched since October. And if Bitcoin catches a bid this month, which is looking increasingly possible with year-end positioning, HBAR could stretch towards 0.18 before December ends. That's a potential 28% gain from current levels. Now, if we lose 0.135, the price would likely revisit 0.122 support. But as long as that level holds, the broader trend still points north. The risk-reward here is asymmetric. You're risking maybe 5 to 7% to the downside with a potential 25 to 30% upside. That's the kind of setup I like. The HBAR chart isn't screaming right now, but that's exactly when you want to pay attention. Quiet charts move the fastest when conditions shift. Support is holding, indicators are improving, and traders are slowly re-entering. December's shaping up to be a recovery month for HBAR, assuming 0.14 stays intact. Alright, that's the full breakdown. Hedera's December 10th upgrade is legit, the technicals are setting up nicely, and the narrative is strengthening with real-world adoption. If you found this analysis helpful, drop a like, subscribe if you haven't already, and check out my latest video on Bitcoin's macro setup. It ties directly into how altcoins like HBAR could perform this month. Let me know in the comments, are you bullish on HBAR for December, or are you waiting for a clearer breakout? I'll see you in the next one. Quick reminder, this is not financial advice. Crypto is volatile and you can lose your entire investment. Always do your own research, never invest more than you can afford to lose, and consider your personal risk tolerance before making any trades. Stay safe out there.